Last year you probably saw the headline. Maybe a politician said it on television. Maybe a relative forwarded it to you, thrilled. Seniors don't pay tax on Social Security anymore. It's finally tax-free. And a lot of good people heard that, exhaled, and quietly built it into their plans for the next few years. Here's the uncomfortable part. That law was real. It passed. The president signed it. But the one thing almost everyone believes it did not do. It did not make Social Security tax-free. It did not change how your benefits are taxed by a single line. Your Social Security can still be taxed in 2026, exactly the way it was before. What actually passed was something much smaller and much stranger. A brand new tax break for people 65 and older that millions of seniors will get little or nothing from. That quietly shrinks the more you earn, and that is set to vanish in just a few years. So tonight I'm going to do the thing none of the viral videos do. I'm going to show you the gap between what they told you and what the law actually says line by line, so you know exactly what you're really owed, who gets it, who gets nothing, and why your benefits are still on the table. If you're 65 or older, or you're getting close, and you heard that Social Security just became tax-free, this is about you. If your mom or dad believes it and is counting on it, this is about them. Stay with me to the end, because the most important part isn't the new break at all, it's the part of the headline that was never true, and the date this whole thing expires. So let's start with the claim itself, stated fairly. In 2025, Congress passed a very large tax and spending law, the one you heard called the One Big Beautiful Bill. The president signed it on the 4th of July, 2025, and buried inside it was a provision for seniors. By the time it reached your ears, it had been boiled down to 5 words. No tax on Social Security. Some of that messaging didn't come from a random post online, it came from official channels, and it was later criticized publicly for blurring the line. So if you believed it, that is not on you. You were told something that sounded like a clean, simple win. The trouble is, the actual law doesn't say what the slogan says. Here's what actually passed, and this is the whole episode in one sentence. The law did not erase the tax on Social Security. Instead, it created a separate, brand new deduction for people 65 and older. A deduction, not a repeal. Those are two completely different machines. Repealing the tax on Social Security would mean your benefits stop being counted, period. A deduction just lowers the income you get taxed on if you have income to lower, and if you qualify, and only for as long as the deduction exists. The headline promised you the first thing. The law gave you the second thing. So let's walk through exactly what that second thing is, the good and the fine print. The real break is this. If you're 65 or older, you may be able to claim an extra deduction of $6,000. If you're a married couple and both of you are 65 or older, that's $6,000 each, $12,000 together. And here's a genuinely good part, so I'll give it full credit. You do not have to itemize to get it. Most retirees take the standard deduction, and this new $6,000 sits right on top of that. You just have to actually be 65 by the last day of the tax year, put the Social Security number of each qualifying person on the return, and if you're married, file jointly, not separately. That's the real, honest win inside the law. For the right senior, $6,000 of extra deduction is worth having. I'm not here to wave it away. I'm here to make sure you know what it is, because the next 3 things are exactly what the slogan left out. Fine print number 1. It shrinks as your income goes up and then it's gone. This deduction phases out. Once your income climbs past $75,000 or $150,000 for a married couple, the $6,000 starts getting cut down. For every dollar you go over that line, you lose 6 cents of the deduction. Keep going and it shrinks to nothing. For a single person, it's completely gone by about $175,000 of income. For a couple, by about $250,000. Now you might think, fine, that's only the wealthy. But here's the quiet sting. Those cutoff numbers are not adjusted for inflation. They're frozen. So as the years pass and incomes drift up, more and more middle-income seniors will watch this break get smaller without Congress ever lifting a finger. The slogan said seniors. The law said some seniors less every year. Fine print number 2, and this is the one almost nobody mentions. It expires. This is not a permanent change to the tax code. Under the law, the $6,000 senior deduction only exists for tax years 2025, 26, 27, and 28. 4 years. After the 2028 tax year, it disappears unless a future Congress votes to extend it, which no one can promise. So if you heard they fixed taxes for seniors and pictured something permanent, something you could lean on for the rest of your retirement, that is not what this is. This is a temporary deduction with a clock on it. Plan around it if you qualify, absolutely, but plan around the expiration date too, because it's already ticking. Find print number 3 quickly, because it actually helps you. This $6,000 is on top of a deduction seniors already had. For years, people 65 and older have gotten a little extra standard deduction just for being that age in 2025. That's about $2,000 if you're single, or $1,600 for each spouse if you're married. That older break didn't go anywhere. The new $6,000 stacks on top of it. So the total deduction picture for a qualifying senior really did get bigger this year, and that's a real, positive thing. I want you to claim every dollar you're entitled to. I just want you walking and knowing it's a stack of deductions, not the tax-free Social Security you were promised. So now the heart of it, why your Social Security can still be taxed, even with this new break. There's a section of the tax law, Section 86, that decides how much of your Social Security counts as taxable income. It uses a formula based on your other income. And here is the single most important fact in this whole video. The 2025 law did not touch that section. Not one word. The machine that taxes your benefits is running today exactly as it ran 2 years ago. Under it, once your income passes certain levels, up to half of your benefits become taxable, and past a higher level, up to 85% of them can be taxed. Those trigger levels start at just $25,000 for a single person and $32,000 for a couple. And here's the cruelty inside that. Those numbers have not been raised since the 1980s and 90s. They were never indexed for inflation. So every year, a little raise, a little more from your IRA, pushes more ordinary seniors over a line that hasn't moved in 40 years. That is the real tax on Social Security, and the law everyone celebrated left it completely intact. Now let me show you the sleight of hand gently, because most people fall for it. A deduction like this one lowers your taxable income near the bottom of the form, but the calculation of how much of your Social Security is taxable happens further up, and the new deduction sits below it, which means it does not reduce the share of your benefits that gets taxed. It might lower your final bill if you owe one, but it does not make your Social Security tax-free because it never touches the part of the form that decides that. And there's one more group the slogan completely forgot. A deduction only helps if you actually owe income tax. Many lower-income seniors living mostly on Social Security already owe zero federal income tax. For them, a brand new deduction subtracts from a bill that's already nothing. They were told they were getting a tax break. They get nothing, not because anyone singled them out, but because you can't deduct from zero. The people who needed help most are the ones this does the least for. So let's put the slogan and the law side by side one last time. The headline said your Social Security is tax-free now. The truth is your benefits are taxed in 2026 exactly as before, under a rule the law never changed. The headline implied a permanent fix. The truth is a temporary deduction that expires after 2028. The headline said seniors. The truth is it shrinks as you earn, vanishes for higher incomes, and gives nothing to the lowest income seniors who already owe no tax. And underneath all of it, the real reason so many retirees pay tax on their benefits, those frozen 40-year-old income thresholds, wasn't touched at all. None of that makes the new deduction worthless. It's real, and if you qualify, take every dollar. It just isn't what you were told it was. So here's what to actually do with this. 1. If you're 65 or older, check whether you qualify for the new deduction before you file. The IRS has a page that walks through the income limits, and a good tax preparer will catch it. 2. Don't build the next 5 years around Social Security is tax-free, because it isn't, and don't build them around this deduction lasting forever, because it's set to end after 2028. 3. If your income is anywhere near those phase-out lines, that's exactly the conversation to have with a tax professional, because the timing of an IRA withdrawal or a Roth conversion can change how much of this you actually keep. Knowing the real rule is what lets you plan. The slogan only let you hope. Quick thing. If this cleared up something a headline mudded for you, take a second and subscribe, because separating what's real from what's viral is the entire reason this channel exists, and there's a lot of noise aimed at your retirement. And one honest note before you go. I'm giving you the rules as the law and the IRS actually wrote them, not personal tax advice. Your situation is yours alone, and tax rules can change. So before you file or plan a big move around any of this, run it past a CPA, an enrolled agent, or a tax professional who can look at your real numbers. I'll put the IRS pages, the law, and the plain English government summary down in the description, so you can read the real thing yourself, and so can anyone who tells you otherwise. And do one thing for me. Send this to one person over 65 who thinks Social Security just became tax-free. Your mom, your dad, the neighbor, the friend from church who's already spending money they think they're about to save. The kindest thing you can do for someone planning their retirement is hand them the truth before they need it. That's what we're here for. I'll see you in the next one.